Hello traders, welcome to part 3 of the Advanced Market Structure mini-series. We hope you've enjoyed this series and there will be more to come. So the next series will be covering supply and demand, and there will be a series after that about confirmations. And it's there where we will start talking about the 1M and 5S. The Advanced Market Structure has focused on the 4H and 15M for a really key reason. All your trade ideas and your narrative, if you're going to trade in the way what we're teaching here at Black Swan, needs to be rooted in the 15M and 4H. So if your trade idea is not aligned with the 15M or 4H, it's not worth taking, right? So to wrap up this series, we're going to be talking about order flow and range liquidity. So when we dive into order flow, if we go back to what was discussed in the second installment, price and time are unaware of each other, right? The composite operator is funneling orders through the market to meet their pricing objectives. They're not concerned with time. But what we're going to start to look at is how we actually use the time frames that we want to trade on, and using that idea of order flow and starting to understand when the flow of orders is aligning with the directional bias you have, or you're seeing a shift in behavior, what you need to be aware of. And then we're going to dive deeper into structural liquidity. So I'm going to be using range liquidity to illustrate how structure will build ranges between each time frame and the behavior and price action you can expect when we break key ranges within the time frames that we like to use. So order flow, the best way to think of this is, as structure is delivered on one time frame, the order flow is illustrated on a lower time frame. So say we're in a market and daily structure is bearish, so we've just created a lower low and we've just made a lower high which takes the low, giving us a strong high. What we expect to be tested, respected, and for structure to continue on its way. So this is our expectation of the market, right? And what you might do is have a supply zone up here, what's unmitigated on the daily. So your expectation is we trade into supply and trade off again. So the order flow of the daily structure is presented to us on the 4H. So the 4H will look something like this, right? So we need to think about multi-time frame structure, what we've covered, and the fractal markets, because everything is playing out at the same time. But the higher time frames will move everything along with it, yeah? So higher the time frame, more volume behind the candles, more weight it has in the market, yeah? So 4H will look something like this at this stage. So this is what has played out already. If I just make that green. Right, so 4H is played out like this. So our expectations is that we're looking for a shift in order flow here to know we can start trading counter trend to the daily. And so we might have a demand, what's marked out to the left, what we can expect as a reasonable area to look for a shift in order flow. And this will be presented to us in a shift of order flow. So this is what we talk about when we talk about a change of character, yeah? So what might we expect to see here? Well, a change of character. So what is a change of character? It is nothing more than order flow shifting. So change of character is a Wyckoff methodology term. So if you're not familiar with Wyckoff and you're waiting for the confirmation series to come out, I suggest you look into Wyckoff, because it's all derived from Wyckoff, and you can kind of say that Wyckoff was the originator, the pioneer in smart money concepts, and you know his methodology has been around for about 100 years. So here we want a change of character. So what does that look like? It is nothing more than we see the lows go. We see some form of internal range that might get swiped again. And then we see the highs break. Now this is going to happen in a real compact space in price. Okay, so these movements are not big enough to determine it as swing, sub, or minor structure, because this might just all this will just unravel within your demand zone. Yeah, and it's the changing candlesticks and how the way the candlesticks are behaving to determine whether you're going to get a change in character, which is our shift in order flow. So this is what we determine as confirmations in order flow changes, and you'll use this within your idea of multi-time frame structure to really refine your entries. Okay, so once we get our valid change of character here, you know, this is where we can expect the 4H to go counter trend to the daily, and then we'll get our 4H bullish cycle, and then we can trade counter trend to the daily until we trade into our week high. So just because a strong high, sorry. So just because a high is strong doesn't mean it's going to hold. Yes, there is trillions of dollars behind weak, strong highs and lows as they're protected by the composite operator. But what we might need to think is here, the narrative could have changed, right? Something could have happened what has realigned the composite operator's objectives, the economic objectives they need to meet. And now this strong high is no longer strong because price needs to trade higher. So we simply don't just wait for price to come into our supply zone and just think, great, I'm just going to sell because this is a strong high, so it's got to be respected, so I can just trade it all the way down. No, you have an expectation of order flow, and so your expectation is that when we trade into our unmitigated supply zone, which we'll be covering more in the next series, we're going to see a shift in order flow, and that shift in order flow is going to give us the confidence and the ability to then take a trade. And then this is when we can obviously refine our stop losses and have super tight entries to maximize our risk to reward. So this here, our change of character, is what we're going to expect to happen when we trade into our daily supply zone. So two things are going to happen, right? It's either going to trade in, give us a valid shift in order flow, and then we can begin to trade down, and we can target the daily week low after the 4H has shifted, because 4H is our order flow to daily structure, and then we can trade all the way down, hoping that we meet the low. But obviously we'd take partials along the way. So this would be our expectation, okay? But you know, if we don't wait for order flow to shift, this could happen. We just shoot off, and we're trying to sell, and price goes off because we haven't waited for order flow to shift. Yeah. So this is the bare basics of order flow, and what we mean by, you know, having anticipation in order flow and what we expect to see play out. And you can use multi-time frame structure to then really get into the detail and dig deep, and you know, trade this 4-hour bullish cycle, because what's happening here? Well, the same process is just playing out. Yeah, so we have our daily bearish market, what's gone into a retracement, so it's pulling price up back to our unmitigated supply levels. Yeah, and we'll have the 4-hour, what is a counter trend to the daily, but it's gone bullish because we've broken swing points in the market, so we can expect a bullish retracement until we hit our strong daily high. Yeah, So that is playing out like so. And it's exactly the same thing, right? So as the 4H is playing out, we can have an expectation of 15M because a 4-hour structure is delivered to us through an order flow perspective through the 15M. So 15M is the order flow for 4H structure. So this is the best way to think about it, yeah? Daily structure is given to us in order flow terms through the 4H. 4H order flow is delivered to us through 15M. So 15M structure and the order flow behind it is delivered to us through the 1M. And then 1M structure, the order flow of that is delivered to us through the 5S. So this is why it's really important to ensure you're getting alignment before you're going down to the seconds, because your 5S needs to be aligned to the 1M, which needs to be aligned to the 15M, which needs to be aligned within the 4H, depending on what type of trade you're taking, yeah? So we're in this bullish phase. So we've just taken this high. So our expectation would be that we trade up on the 15M. We've taken the high, so we can expect a counter trend trade back down into the discount of this leg to create the higher low. So what would we be waiting for? Well, we need a shift in order flow. And how is that presented to us? Change of character. So if you're thinking this change of character doesn't really make too much sense to me right now, do not worry. You can do two things. You can join our Telegram, and the link is to it into the video. And we're posting trade recaps and pre-session analysis daily, and we got quite an active community now, so you can get more insight through that. And after we've done the supply and demand series, we're going to dive into confirmations. So within confirmations, we're going to be looking at change character, supply and demand flips, and a few other things. So let's look at this with real market data, yeah? So right now, structure is bearish on the daily, on EU, right? And that is shown to us through the breaker structure here, the respect of the strong high. Although we grabbed liquidity, we never broke above it, and then we followed on to break this daily low. So our expectations of the daily is we make a new lower low and a lower high. Yeah, so where can we expect order flow to shift to give us a bullish cycle on the 4H to go test or collect orders from our strong high? Well, I had a demand zone marked out here where I was expecting order flow to shift, yeah? And what I will do is show you how that unravels when you want to see your own zones see a change in order flow. So as we can see, price trades in, yeah? We create a low and we sweep it. So this is our first signs of a change of character. So what do we need to see? What needs to happen for us to give us a valid change of character? Well, for me, what I need to see this develop a little bit more. So we see the next candle. Okay, so we've taken the high, that took the low. But what I want to see is, I want to see this low stay, hold, and then I want to see a sweep of this high. Then we can look at this as a change of character, yeah? So I'm looking for this to go. As you see, unable to break the low, create internal range liquidity within this leg of price. Then the high goes, yeah? So now, we've got a 4-hour change of character. And obviously this is past market data, so we all know that 4H goes off after this and is currently going bullish, yeah? So how can I look to trade this on 15M, 1M? So here we are on the 15M, and as you can see, I've marked out the points where we've had our shift in order flow on the 4H. So how do we trade this? Well, I need an unmitigated 15M demand zone, what has broken something and has imbalance and is not mitigated, right? So we have this zone, because this zone broke our week high. And the break of this week high signified two things, yeah? It signified that 15M structure was going to go bullish because we have our low here. 15M high here, yeah? And this high creates this low. And then all these points here are just internal because this low is not broken again by any of these highs. And this high is the origin of the move that then took this high. I think I just called that high. Obviously, you know, it's a low. So yeah, now we've got our zone, right? Now we've got our zone. Okay, so prices come and taken the 15M high, giving us the indication that 15M wants to go bullish, and we can look to trade from this demand zone here. As you can see, we've had a V-shaped recovery, and we're impulsing back down to the zone. So we need to use a bit of common sense here. We're not just gonna let price trade into it and look for 1M change of character. Yes, we can do that if price is really aligned, but what we need to think is, okay, so we've had a 4H order flow shift, but it's still a heavily bearish market. So it's better to be safe and wait for 15M to align with what you want to do and then capitalize on the lower time frames. So we've got our zone and we can be like, right, so I want 15M to trade into here and I want to see a change in order flow on the 15M to signify that it's then going to fly off. So as we can see, we trade in. So what happens, we actually get a change of character, but we never have our zone hit, right? Because what we need to think is there's actually a range of demand here, yeah? And this is sometimes when you're going to miss the move because it's not going to hit your zone, okay? You can't pick the right zone every time because there are also ranges of supply and demand what are integrated within our zones. And sometimes it will respect the range, sometimes it will come and take your zone, right? In this instance, it respected the range because all a demand range or supply range is a supply or demand zone on a higher time frame. Okay, because we know that price and time are not correlated. Yeah, that's fine. And how do we know this was a change of character? Well, we put this high into the low into the market, and then the high that came after the low was taken. So here, yeah. So that's great. So what can we do? Well, we can look to trade off the decisional that created this change of character. So this demand zone right here. And it can be, and you can say to yourself, right, if price comes in because 15M has aligned, so if the 1M comes into here and gives me a change of character, I'm good to take a trade. Price comes in, and what happens? Well, it never comes into our zone again. And at this point, you could be getting really frustrated, but there's always another opportunity to get in, yeah? So if we just rewind, because the same thing's happened, yeah? We have a zone, and prices come in, it's missed it, it's given us a change of character. Here to here, and you know you're waiting for this to get hit to get involved, and it misses you, and that's fine. But I mean, you could have been looking at the range, yeah, and looked to get involved. So we missed out on the 1M entry, what would be presented within here. So yeah, it would be very, very difficult to actually get in on this trade, to be honest with you, which is fine. So we got a new zone to trade from, right? Because what are we expecting on the 15M? Well, we are expecting this to be our new lower, higher low, and then we're going to go create a new high, yeah? So order flow is going to be aligned with us because we've got 4H order flow shift backing us, yeah? And we can expect a full H bullish cycle to then go test the strong daily high. So we just follow the order flow, yeah? So we've got a new zone to trade from, which is right here. So you can think to yourself, right, we're aligned on all time frames. We are clearly bullish. If price comes into here, I'm going to look for an entry. So as we can see, 1M trades in. We get a change character right here. And that is delivered to us here. We say, right, this is our change character. And then you might look for an entry here, because this is a decisional point in the market, what created this change character. And this is when you start to look for fractal entries on the 5S. So I'm not going to go into too much detail. One, because 5S doesn't go this far back, and two, that is going to be a confirmation series. I'm just doing this as a bit of extra information for you all. And so you can look for a trade from here, which is fine. And what happens, that trade will fail. And what you need to really dig down into your mindset and come to understand that win ratio is not really important when you're trading like this, because the risk to reward is extremely significant. We're not targeting 1 to 3 trades. You know, we're looking for 1 to 20s, 1 to 30s, 1 to 40s, 1 to 50s, yeah? And when you're banking that level of risk to reward, yes, you need to be extremely disciplined and respect your loss count for the day, and you need to build your own risk management portfolio, and you need to be comfortable with what you're willing to lose on the day, because you're going to take losses, yeah? And it's just going to happen. But there's nothing wrong with taking losses, because when a move starts to unfold, you can do two things. You play the decisional, or you play the extreme, yeah? So in this instance, the decisional failed. So you can say to yourself, right, I'm going to take a trade from the extreme. And everything is confirmed for me here. 15M is aligned, 1M is aligned, 4H is aligned. You look to trade these zones, and you can just get involved. This is already confirmed, yeah. And you're getting off the extreme, and then you can trade that up, right, to the moon. For us at Black Swan, what we like to do is have our 1M confirmation zones, because we wait for the 1M to confirm, and then what we do is go down to the 5S, and instead of just hitting it with a 2-pip stop loss, we let the same series of events just play out, right, within here. And if you see a change character, a flip of supply to demand, that's when we look to get involved. But it's all driven through the top-down narrative, yeah? You wait for the 4H to align with your 15M, you wait for 15M to align with 1M, then you look for these fractal entries. So to wrap up this final installment in our advanced market structure series, we're going to talk a little bit about range liquidity. Now, structural liquidity can be delivered to us in many forms. We'll talk about it in a lot more detail in future videos and trade recaps. But for now, we're just going to cover the basic concept of how liquidity is delivered into the market and how to read what is the available liquidity within your trade idea. Because structure needs to come first, right? And what we do is we use supply and demand and liquidity to support our structural trade idea. Everything is rooted in structure. So you shouldn't just be targeting areas where you think liquidity is going to get run. Because when you think about it, every single candlestick has liquidity, because a candlestick is just a representation of buy and sell orders. So there is liquidity everywhere, and you're never going to really know what liquidity is being formed for a particular move. So you need to take structure as your priority and work down the chain from there. So when we think about range liquidity, it looks something like this. So let's say this is our 15M. Yeah, 15M's bearish in this example. We create a new strong high that runs the low. And during this sequence of events, what we might be doing is obviously selling, yeah? So we might have a supply zone here that we waited for the 1M to trade back into, realign the order flow with the 15M structure, and we could be loading up sales, yeah? So the 1M could be delivering to us a little bit like this. When we think about multi-time frame structure, this is exactly what we like to see. And then here we might get change character, and then we trade down, yeah? All the way down. And what we're doing through this cycle in the market is we're selling. So we're having a great time, stacking sales. Maybe here. We're stacking more sales here. We're stacking more sales here. And so on. And we're getting really, really excited because we've got all these sales and we're running them down, and I think we're gonna go to hell and we're gonna make 1,000 R. But something we do is we can forget that we have run a low on the 15M here, right? We're still stacking sales and we're still, and it's really easy to tunnel vision, right? And you're looking at all these 1M highs as places to trade from because you think price is gonna come back and then you're going to keep stacking sales, right? But what happens when we break the 15M low, we create a range of price, yeah? We create a 15M range, right? So we create a 15M range, yeah? And these 1M highs we see is now the available liquidity within the range for price to come and take to go back to a more premium area price to then mitigate an unmitigated supply zone that will be further up in the leg, yeah? So we have a supply zone here. And from a psychology point of view, if you've got multiple scaled in sales coming down this leg price, your mind's going to be telling you, right, I want to get more, and this is where the element of greed comes in, yeah? Because we might have completely dismissed the fact that there's a valid demand zone here, right? But we traded into, and we could completely miss the fact that we've had a 15M change character, right? So what's going to happen? Well, price isn't going to come to this 1M high here and sell off. I mean, it might do, but it's more realistic that it doesn't, yeah? So it's extremely easy to dismiss what is happening and try and sell here. But what happens if we sell here? Well, price might go in your direction for a little bit, but it runs a high. And now you're getting really confused, yeah? Because you're like, well, it's a bearish market. But what has happened when we reset the range and we break the low, price needs to hunt available liquidity to create the next 15M leg of price. So you could be selling here, maybe take a loss or break even. So you think, right, well, I'm gonna sell here. So then you sell here, and you know, maybe price runs again, and then you just get taken out. And then you sell here, and you get more and more frustrated with yourself because you're thinking, well, it's bearish. Why is price just going bullish? And then by now you've taken maybe 3 losses and a couple break evens, and you're done for the day. And what will happen is price will come to the more premium place in the leg, give us a change character, and then melt, yeah? But if you fail to recognize that when we reset a range, price needs to target appropriate liquidity to fuel the next move. So all these highs were fine as we were expanding down, but once we break the 15M low and we have a shift in order flow from a demand or supply zone, we need to adapt to the situation at hand here and realize that all these 1M highs is just simply now available liquidity for price to come and collect all these orders, and then we get to sell from the either the extreme of the range, or there could be a decisional in more premium pricing. So let's run through a real example on the markets of how range liquidity is delivered to us, and how old structural points did work, but once the range is reset, it's now available liquidity for the next structural leg. So here we have the daily, yeah, and here we ran the low, right? So we have a range of price. We call this our supply range, right here. And within this range, what do we have on the 4H? So we have a collection of old highs on the 4H. Well, initially, as you're going through price expansion, yeah, to run this low, because obviously we've created a new lower high here, and we can sell it down. So previously it'd be absolutely fine to sell here. To sell here, that would be fine. Sell here, that would be fine. And we could sell here, and so on. And naturally, you're going to take profit on these trades. These are really, really good trades, and you're not going to just hold this at full volume and expect it to go forever, right? So maybe you banked, a bunch of profit on these sales, and you're heavily bearish on EU because structure's being delivered to us bearishly, right? But what happens when we break the range? When we create a new range, sorry. So we get a 4-hour change of character right here. So this is the order flow shifting to then come test the more premium areas of the range to collect orders and create and take liquidity to fuel the next structural leg. So before this unfolded, how many people do you think had a sense of either FOMO or urgency to continue to sell this market? How many millions of traders were trying to get involved here? Trying to get involved here. Maybe they get in, they think it's going to go to hell, and they get taken out, right? And then they're trying to sell again, get taken out, yeah? So now everybody's trying to sell from here. Runs a little bit, but they get taken out, right? And then price expands and collects all of this available liquidity, right? Because these are, what is above these highs? Stop losses, okay? So what does the stop loss mean? It means when it's run, it releases orders into the market that the composite operator can collect to fill their own orders, because they're ordering in such huge volumes, they can't just market execute like we can. They need to build structure and build liquidity points that they can run and take the orders required to move price to the next pricing level within their economic objectives, yeah? So as we come down, it's like a price, like I've said, it's fine to sell, 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 sell. But when we break the range, we need to understand that price relative to its time frame. So here it's the daily, so it's going to be the scale is going to be far bigger than the 15M, but it needs to hunt relative liquidity. and the relative liquidity in this example is these collection of highs. Yeah, what price trades into and just absolutely steamrolls through, collecting all those orders from either stop losses and people trying to sell the market early. And what happens is price comes to a more premium level in the leg. Yes, it sweeps the highs to collect liquidity, but you can still get involved if you wait for the liquidity grab to happen. And then price sells off. And obviously we grab liquidity again, but again, what happens is we then go back into a bearish cycle and we can sell the market down. So yeah, that's a little bit of insight towards, you know, how you can see range liquidity being built and taken in the live markets. So obviously we know the market is fractal and we use multi-time frame structure. So this sequence of events is delivered to us exactly the same on all time frames. Just the distance and the movement and the scale of, you know, how price will hunt liquidity will be relative to the time frame. So you need to obviously assess where we are in price, what structure points have been taken, and what is the liquidity we need to hunt that supports structure, because structure comes first, right? Then we can look to get involved. So yeah, we hope you enjoyed this advanced market structure series. We will cover structure in more detail in future videos through trade recaps and one-off videos. If you want to learn more about how we trade at Black Swan, please join our Telegram. So we're at about 380 members now, and it's free to join. So you've got nothing to lose by getting involved with the community. And, you know, the whole team is active, and, you know, we're there to support you on your trading journey and being able to learn these concepts in a more concrete way to guide you on your journey. Thanks for watching. Peace.